Hey, everybody. If you're in the room, let me see that you're in here. Say hello or tell me where you're from or something about your business. I'm VR Small. I'm the founder and CEO for the Veteran Women's Enterprise Center. So this is Funding Fundamentals. We're looking at establishing a foundation for accessing capital. I'm seeing my screen, but I'm not seeing you guys. And forgive me, I'm new to Yard Screen, so I may be a little lost in here, but I'm gonna do the best that I can. So let's kick off with women winning. 50% of all women-owned businesses are minority-owned. And women-owned businesses employ more than nearly 9.4 million people. Every day, over 1,800 new women-owned businesses start up. So ladies, tell me, how many startups do we have in the room? And you can enter that into chat. How many startups do we have in the room? And last but not least, women own 42% of all companies in the U.S. That's almost half, so we're kind of kicking it. But let's see how COVID-19 has impacted us. The U.S. Chamber did a pre-pandemic assessment, and 60% of female businesses said that their business health was good. And then last year, that dropped to 47%. So how are you ladies feeling today? How do you feel about your business health today? Is it good? Is it fair? Is it poor? How are you feeling about your business health? 63% of women predicted their business revenues would increase in the first quarter of 2020. So we've already finished first quarter 2021. How is it looking for you? Were you able to do better? Not so good? How is 2021 looking for you? And if you guys are entering info in chat, I am not seeing it. But I hope you're talking amongst yourself. 30% of women-owned businesses had to close temporarily during the pandemic versus 17% of guys. Guys, that's almost double. 17% is just two off from 15%. So double women-owned businesses had to close. So we face some challenges. And as mompreneurs, you guys have a whole nother set of challenges. A lot of women decide to get out of the workplace or even scale down, to take care of their children. And then statistics tell us that almost 30% of single moms are living below the poverty line. Just as importantly, women were more likely to be laid off during the pandemic. So there are a lot of reasons for mompreneurs to say, you know what, I want to take control of my finances. I want to see what's going to be happening to me. I want to lead that process. And I applaud you ladies for making that decision, whether you're thinking about it or you're already in the middle of it. Women persevere. This was in 2018. Bank of America did a survey, and 84% of women expected year-over-year revenue growth. 73% plan to expand, and 62% expected a revenue increase over the next 12 months. Are we getting back on track? How are you feeling today? Does it look like growth for you? Are you feeling good about your business? And the traits with the greatest impact on success, they said, was integrity, perseverance, and passion. Do any of those words resonate with you? All right, so moving forward, first things first, when we talk about funding, I need you to know that it's really not an outside thing. The funding is an inside thing because it starts with you as a business owner. setting up and understanding your finances. So making sure that your financial statements are tight, and absolutely you need to have your team, your CPA, your accountant, your bookkeeper, whether you have all three or just one of the above. They may be doing a lot of the work for you behind the scenes, but you as the business owner must understand your finances and be able to clearly articulate that to anybody that you're looking to invest money into you. Even if it's a grant, they're going to ask you, what are you going to do with this money? What do your finances look like? Where are you going with your business? So know your profit and loss statement. Understand your cash flow, how money is coming in, where money is going off. Particularly as a mom, you have a family to think about. You don't want to be caught off guard with any surprises around your business. So you want to completely understand your business financials and where you're going every step of the way. This is something you should be looking at on a daily basis, but you should also have your projections. Another thing that statistics tell us about women is that we don't calculate our equity correctly. You're putting money in your business almost from day one. So, how much equity do you have in your business? Do you know? Are you calculating your equity correctly? Is it outlined in your balance sheets? Every dime you put into your business, you should be counting and calculating. It goes back to the value of the business because this money is an investment. It's not an investment from an outside person. It's an investment from you. And it's a quality investment. And it lets outside investors know that you're committed to your business. You've put $5,000, $10,000, $15,000 of your own money into this business because you believe in it. And this is how that money has been allocated. Even at the end of the year, when you have profits and you say, you know what, I'm not going to pay myself a big salary. I'm going to put this back into the business. Equity. You're building equity in your business because all of that money actually belongs to you. It's your business. But you're not going to just take it out and spend it. You're using it to continue to grow your business. So if you're not comfortable, and I can't see your comments, but if you're not comfortable with your financial statements, you need to get comfortable. That's not something on the side. It's just like you know your product or your service. You know that like the back of your hand. You need to know your finances like the back of your hand. And that is the first thing first. It's the first thing you need to do. If you're looking for funding, get your finances in order. Why? Because you need to be able to tell your financial story to anyone that you are trying to get an investment from. First, why do you need it? Not every business needs a lot of money to open. So why do you need this money? Okay. How is it going to help your business grow? How is that going to turn that situation around for you so that you can see your business growing? That money needs to do something, not just be sitting there, but it needs to be making a difference in your business. And then what are the risks? Are you a big risk? And we're going to talk about how banks and other investors calculate those risks so you can understand how to make your business more appetizing to an outside investor. Someone said, is there owner equity where I can initially put my money, but is there an allocation for sweat equity? No, we don't get to allocate sweat equity, but you can definitely share all of the work that you've done. And as they said in the original opening from Deck, when a business owner, you have to do a lot of different things. So people know if your business is moving forward and you are it, you've put that sweat equity in. So the best funding options for your business, believe me when I tell you, one size does not fit all. It doesn't. Everybody's not going to be doing bootstrapping. Everyone shouldn't run out and get a loan. Not all of us are right for the different investment options, and even crowdfunding may not be the appropriate option for you. But we're going to talk about these different options and how they impact your business. But remember, the foundation is you. It's your finances. That's what everybody's going to come back to. What do your finances for your business look like? Even if you haven't started, what are your projections? How are you going to spend this money? How are you going to make money? Who do you have relationships with? All of these things are going to be looked at. So 61% of female entrepreneurs choose to fund their business. There's nothing wrong with that because we know it is so difficult for us to get funding. But you got to look at the pros and cons. And here they are. 28% of female business owners have 10 to 19 consumer trade. Those are credit cards. If you have 10 to 19 credit cards, and I know, ladies, we want to get the discount from this store and the discount from that store. And in order to get those discounts, they make you get their credit card. But that works against you when we start looking at your debt ratio. So you want to start weaning that down on your personal side, weaning that down. And look, guys only have 20%. So we're almost 10% ahead of them. When you look at your credit rating, 15% of male business owners are in that high credit score, 750 to 849, compared to 46% of women. And you would think that 5% doesn't matter, but it does. It matters. And you want to make sure that you're moving in the right direction. In the lower ranking, the 550 to 649, 18% of women are in that range, compared to 14% of men. It's not that you're not taking care of your business. It's that we have so much business to take care of. We're overextending ourselves. And yes, you're paying all your bills, but your debt ratio, it doesn't look good. Even when you're paying all those bills. I remember when I started my business in New York, I had an abundance of credit, a lot of cards, never used them. They still wouldn't let me get a line of credit initially because they said, hey, we see you haven't used this credit, but the point is you could. And now that you're starting a business, what if you run up all this credit? You're not going to be able to pay us back. So they're not just looking at what you use, they're looking at what you have available to you. We're 42% of all businesses, 34% of businesses accounts, but we only represent 22% of commercial credit. So the commercial credit cards, the business credit cards, the business credit that's out there, we're only representing 22%. So less than half of us are represented in that commercial market. What does that do? It messes up our business credit profile. You may say, I've got good personal credit, but that doesn't mean you're going to have good business credit. You have to build your business credit. So I would say, if you're going to invest $5,000, $10,000 into your business, why don't you open up a secure line of credit with a reputable bank? Now you've got a business line of credit. It's your money, but you're building that credit with that provider and letting them know you can pay back your bills. So you were going to put that money in your business anyway. So rather than just spend it, create a line of credit, create a secure business credit card, and begin to build your business credit. 22% of women compared to 15% of men don't even apply. Why don't they apply for loans and credit? Because they already feel like they're going to be turned down. And we know when we don't get credit, it hits our credit bad that we applied and then we didn't get it. But sometimes you got to take that risk. And one of those risks that really can't work against you, getting you a secured line of credit with your money. If you're going to use your money, use it wisely. The other thing that women use is family and friends. But look, only 25% of women are getting money from their family and friends. So this is not where you want to put all of your eggs in your basket. You want to look at other revenues and other options for your funding. And it's all going to start with how you structure your business and your finances. So if you're listening to me now and you're thinking, I don't really know my cash flow. I don't really understand how my money comes and goes. When it comes in, I pays my bills. And if it doesn't come in, I figure out something else. That's not good business. So make sure you're paying attention to how your money is going in and out of your company. 3 major credit rules you need to be aware of for your business is going to be Equifax, Dun & Bradstreet, and Experian. I'm not going to go deep into these because we only have so many minutes. But what I do want to say to you is this. One, make sure whoever you're doing business with is reporting to one of these three institutions. I had to find out the hard way. Not everybody that gives out loans, not everybody that says they're doing business credit is reporting to these institutions. So while you think you're building your business credit, it's not even being reported. And if it's not being reported, you're not building credit. So Equifax kind of sends everything over to the Small Business Finance Exchange, and they're really looking at your business credit. Dun & Bradstreet looks at your vendors. Who are you doing business with? Who do you have vendor accounts with, and how are you paying those vendor accounts? But Experian kind of looks at everything. They look at your bank, they look at your data, they look at your credit report. They kind of throw it all together and say, here's a balanced look at how this person's credit is. And you can go to any of these, or you can go to Experian.com small business and always look up your business credit. They say you should look at this every month just to make sure there are no errors, and that if there are errors, you can correct them quickly so that they don't impact your business credit. So how many of you have started to build your business credit? And where are you building business credit? I see the last comment. All right, ladies. The next thing is loans. 31% less average loan size. That's what we're getting as women. But it's not just about the loan. It's really about building relationships. Make sure that you have a business plan before you ever go to the bank. They want to know that your business has a plan, that you know what you're going to do, you know how you're going to do it, you know who the people are that are going to be working with you, you understand your market, you have a model for how you're going to sell your product and make money. Also, think about your financial projections. You don't want to just say, hey, this is what I'm doing this month. What are you going to be doing down the road? Because you're not asking for a loan for a month. You're asking for a loan for a year, 2 years, depending on how much money you're asking for. So what are your financial projections down the line? Also, get to know your banker. Go into your bank, schedule a meeting with your banker. Banks don't just have loans. They have all types of products. They can help you with how you get your, how to process online expenses like buying online. They can help you do that. They can help you look at different HR packages. A lot of the banks have a lot of different products and partners that they work with. So don't just assume I'm going to go to the bank for a loan. Go and talk to your banker. Find out what the bank offers. And sometimes they offer these packages at a discounted rate. Even more importantly, you're building relationships. So if that product doesn't work out, you're not alone. You can go back to your banker and say, hey, you know, I tried that new product you recommend to me, and I'm having a problem here, and so hasn't gotten back to you. Guess who now has your back? Guess who's going to follow up with that provider to say, hey, you know, one of my clients is using your product and they're saying you're not getting back to them. Can you look into it? So you're not alone. So look into your bank. Make sure you understand what they offer. Make sure your banker knows your name. Bring in your business plan. Talk to them about what you're doing and where you're looking down the road to do more business with them. If you're looking at new banking relationships, do your research. Not every bank is good for small businesses, and they know it, and you should know it too. Also, some banks specialize. Some banks are into construction, real estate. Some banks are into retail. Some banks are into healthcare, and that's where they like to put their money. So do your research. Look into your bank. If you can't find it online, again, have a meeting with your banker. Ask them, you know, where does this bank focus its energy? What are the average loans to small business? What are the average age of a small business when they give out a loan? Is it revenue driven? You know, what does this bank look at? They know. This is before you ever fill out an application. Make sure you understand that you're getting with a bank that understands you as a small business owner, that's interested in what you're doing, and that's committed to helping you. So if you're looking for a $10,000 loan and their average loans are $50K, this is not the bank for you. They don't want to do the smaller loans. And so more than likely, you're not going to get that loan. Find out, understand your bank. Build your banking credit and then utilize their resources. Other providers are micro lenders like People Fund, Lift Fund, Axion, and there are a multitude of community banks that are considered micro lenders that you can look in. They usually give you better rates, and they're usually a little more lenient about what they're looking at. You may have less time in business. Your credit rating could be a little bit lower. And oftentimes they'll work with you in different ways around your loan amount. Say you hit a rough rate, they'll be willing to negotiate your loan payments, while a bank may not be willing to do that. Online providers are becoming very popular too. So look into OnDeck and Kavach and StreetShares and see if they're right for you. It's not a recommendation. It's a resource that I'm letting you know that's available. See if those resources are something that would be useful to you. Remember, the SBA doesn't actually give you a loan. What they do is back up your loan and say, hey, if you get this person a loan and they don't pay it off, we'll take care of it. But here are a couple of SBA resources you may not be aware of. So the Small Business Investment Company, they're funded by the SBA, and they actually make investment in companies. I suggest you do some reading. Small Business Investment Company. Also, Small Business Innovation Research. They give out grants for early startups. Now, women hadn't been getting to that table, but in the last year, they have really been marketing and pushing and encouraging more women to apply to these grants. So do your research. Small Business Innovation Research Program. These are grants. You won't have to pay them back if they fund you. But if you're not applying, you can't possibly get that money. Funding for female founders stalled at 2.2% for VC dollars in 2018 and hasn't really grown much. We're still hearing the same thing, that we are not getting a piece of the pie when it comes to angel investors and venture capitalists. This is a great little piece here that really breaks down the difference between an angel investor and a venture capital. And you can find it at wallstreetmojo.com. It goes over like, what's the difference between an angel investor and a venture capital? You know, what are the risk levels that they're looking at? And you know that an angel investor is usually an individual, someone who has some money they want to back, usually another business owner that's very interested in backing another business owner. They understand the risk. They want to get to the table. Normally, venture capitals are institutions, and they consist of a lot of different people, some individuals, some funds, and because they have to make sure that they get money back to the investors who are part of that fund, they're a little more rigid, a little more particular, and we find that even sometimes there's often some bias in there when it comes to women. So do your research again. I'm going to show you some options that you can research and where you can find them. So here's two great resources right here in Dallas. First, you have Dallas Bill. So if you're trying to find out who are the providers, who can I go to for help? Where can I get mentoring? Are there accelerators that specialize in what I do? Where can I get funding? Who can fund me? Dallas Bill has a phenomenal platform where you can go in and tell us who you are, your startup, your growth, you're mature. What are you looking for? You're looking for an incubator. You're looking for mentorship. You're looking for funding. And then it will start outlining for you all of these different organizations that are a part of that network that can support you in your effort. Also, the Dallas Fort Worth Innovation Guide, which is on the Dallas Regional Chambers platform, gives you a number of links to different funding options and meet and greets and different meetings. So these are two great platforms. You decide which one you really want to use. Because I'm new to StreamYard, I don't want to jump because I'm not sure if I'll be able to jump back properly. So you make sure you write down Dallas Bill, awesome resource, and the Dallas Fort Worth Innovation Guide, a phenomenal resource for you to find out what's happening, not just in Dallas, but it also has a number of resources for the state of Texas. So 2 angel investors right here in your back door that focuses on women is Golden Seed. How many of you guys have heard of Golden Seed? Not seeing an answer. So Golden Seed investors share the common goal of achieving market returns by investing in women-led businesses. And they do what they call these open calls. So you can sign up to just come and pitch your business to them, and they'll give you some feedback on what they think how good your pitch is, whether they think you might be a good investment. If not for them, they may also share some other options for you. You want to pitch your business as much as possible because you want to get as much insight as you can about the value of your business, how other people are seeing your business. Are you clear about what you're trying to do? Are your finances lining up? Is this a good opportunity? So you want to look for as many opportunities as you can to pitch your business. Pipeline Angels looked at women from all different categories: trans women, non-binary, two-spirit, agender, gender non-conforming foundings. Again, all in that category, specifically looking at how can we fund more women to grow their businesses. We talked about venture capitals, and we know that we're not getting the money, so I won't go into depth, but I will say that when you look at the Leno study, you found that only 24% of the business accessing capital in the past year were women-owned. Remember, we're 42% of all of the businesses, but just a little over half of us are getting to the table. So a lot of women are not getting what they need to fund their business, but that is changing. And that's the good part. Here's a list of venture capitals. You can find this on the Regional Chambers website. You have Beam Angel Network. They're up in Austin. They focus on women. You have Bumble Fund. Again, don't just jump on these things and reach out to these companies. Research them. Go and look and see, what does Beam invest in? Because if they don't invest in what you do, not only are you wasting your time, you're wasting their time. And more than likely, you won't get an appointment. Look at Bumble Fund and find out, what are they doing? What are they offering now? SoGal Ventures has been doing a lot of different grants and pitches, and they do these year round. So when are they doing it again? And how do you start getting your business lined up to get to the table to access these resources? Texas Women Ventures, another incredible fund, millions of dollars that they're investing. But what are they investing in? And is it what you're doing? Also, you have the True Wealth Ventures. I know that they're doing very health, innovative, and sustainable products. So if you're into that, they might be a good fund for you. The Minority Entrepreneurship Institute looks at minority and Black females particularly. So if you're in that group, here's a great place that's already looking for you to tap into. But again, research. What are they funded? What are they funded? And Capital 3, I found them on Hello Alice. How many of you guys are familiar with HelloAlice.com? So when I went to HelloAlice.com, I logged in because you need to sign up and become a member if you're not. Amazing resource. And I typed in venture capital for women, and I had rows and rows and rows. So again, there are opportunities out there, but you have to do your research. You have to make sure you're looking for what works for you and not just hoping that it falls into your lap. That you're finding out who's investing in what I'm doing. Who's investing in women? Who's investing in minorities? Who's investing in health, retail, food? I forget the name of the company, but one of the food companies is doing a grant program right now. And then from grants, you get to mentorship. And from mentorship, you may get another investment because now they know who you are and they're able to get a closer look into what it is you do and how they might connect with you. You got to work your networks. Yep. Hello, Alice, not Alex. Alice. Hello, Alice, the second one.com. Never heard of it? Amazing resource. So get connected. Crowdfunding. Crowdfunding is becoming a phenomenal platform for women. Yes, Alice, ALICE. Crowdfunding is becoming a phenomenal resource for women. It's an opportunity for people you've never met, for people who don't have a lot of money, but want to see entrepreneurs grow and want to be a part of something innovative to get to the table. So the two traditional forms is, startup companies. And I know you guys have heard of crowdfunds for people when somebody dies or there's been a disaster and people go on and say, hey, we need to raise money, to pay for our home or, to pay for surgery and different things like that. There's also new crowdfunding platforms that specifically look at the arts and entertainment and how people can fund those kinds of professionals. Here's some basic things though. Number one, restrictions apply to who is allowed to fund a new business and how much they are allowed to contribute. So it's not just milly-willy, anything goes. Some crowdfunding platforms will not give you your money unless you reach your goal. So make sure you read their entire layout of what the requirements are. So if you say you want to raise $25,000 and you raise $23,000 and that platform doesn't give you your money unless you reach your goal, you could lose the entire $23,000. Make sure you read and research the platform. Also, they make their money by taking a percentage of what you raise. So make sure you understand their percentage. What are they going to take off the top before they give you your money? And that could be anywhere from 5 to 12%. That's a nice chunk of money. So if you're going small, that can have an impact. So make sure you understand what percentage are you going to be paying the crowdfunding platform that you're using. I recently came across a platform. I couldn't find it in time for this presentation, but they're for minority women and they don't have a fee. They just want to help you get out there and connect with people that want to fund you. And I'm sure they're getting funding by sponsors and other people that are helping them create this platform to help underserved communities. But do your research. Look for crowdfunding platforms specifically for women, crowdfunding platforms specifically for mompreneurs, crowdfunding platforms specifically for minorities, crowdfunding platforms that are specific to your industry. There are so many now. It's not just Kickstarter. It's not just Indiegogo. It's not just GoFundMe. There are a multitude of crowdfunding platforms and they actually work. I've seen people raise hundreds of thousands of dollars and that can literally be transformational for your business. But you got to do your homework and you got to make sure you're on the right platform. And then you want to galvanize your people. Make sure you can connect it to your social media and let your friends and family know, hey, this is how you can help me. And it doesn't require a lot. If everybody throws in a little bit, we can reach our goal. Work your network. Other women and men know things you may not know. Just like someone just said, they never heard of Hello Alice. Work your network. Ask questions. What are other people using? What have other people used? What was their experience? Where are you banking? Have you gotten a loan? Who did you get the loan with? What was those interest rates like? Is your banker responsive? Find out what other people are using that works. You don't need to reinvent the wheel. You just need to get connected. Our slogan is connecting you is what we do. We always invite you to get connected. So I challenge you today to connect with some of the women on this platform. Ask questions. Follow up with a virtual coffee, or if you're ready, an in-person coffee. And don't try to go it all by yourself. You are not an island, and you don't want to be. You want to be connected to other people that face some of the same challenges you face and have already overcome them. So why do you have to fall into that pitfall when somebody can give you the detour? You just have to ask the question. You just have to be connected.